Welcome to another episode of Know Your Ombud. This series of conversations aims to help you, as a consumer of financial services, understand your rights and where to go if you are not treated fairly. The financial ombud schemes include the Phase Ombud, the JSC Ombud, Pensions Funds Adjudicator, and the National Financial Ombud, all of which are overseen by the Ombud Council. Lodging a complaint with an ombud is free, and you do not have to appoint a lawyer. Let's be honest, there's not much in life that you can get for free. In each episode, we speak to one of the ombuds to understand the cases they deal with and how the ombud adjudicates complaints. We examine cases where the ombud has ruled in favor of the consumer and those that go in favor of the financial institution. This helps to explain our rights and responsibilities. The National Financial Ombud is responsible for handling complaints from customers of banks, credit providers, short-term and long-term insurance. And today, our focus is on short-term insurance. So welcome to Edite Teixeira Mckinon, who is the lead ombud for non-life insurance. So welcome, Edite. Before we start going into the case studies, we just need to explain to everybody, I know we call you non-life insurance, but what comes to you? What kind of policies or products should be coming to you?
So non-life used to be short-term insurance. So anything that covers a motor vehicle, contents in your home, commercial buildings, cell phones, travel insurance, anything that's underwritten by a non-life insurer.
Pet insurance. So I have a complaint about pet insurance
Absolutely.
as well. So anything that's called insurance, but it's not about life or with one of the long-term insurers, we can come to you.
Correct.
Okay. When we're unhappy with the policy outcomes, obviously. I think that was actually quite interesting for me as well, with the creation of the National Financial Ombud, which you just have to go to the National Financial Ombud and they will say, actually, this case belongs with this division. So you probably don't even really need to know, but I think it's good to know at least that there is an ombud if I'm unhappy with, my household contents.
Correct. We always used to be able to refer complaints that didn't fall within our jurisdiction to the correct ombud for complainants. It wasn't like we turned them away and let them find the correct office. But now it's so much easier. We're all housed together, and complainants don't necessarily need to know, who underwrites this policy or not.
Okay, I read your annual reports, and I know that car insurance makes up your biggest amount of complaints. And just judging, by the way, from the kinds of emails I get, car insurance, very, very contentious. What makes car insurance such a contentious issue, or that it's something that you get so many complaints about?
I think it's driven by the fact that most policies in the market sold to the public are motor vehicle insurance policies. It's really just that.
Volumes, Dan.
It's volume. So most of our complaints are generated from claims that get rejected. So the more policies there are in the market, the more claims, the more complaints. That's generally been the trend. Motor vehicle insurance is the prevalent product in the market when it comes to, public consuming that type of product.
And one of the complaints I actually quite often get, and I think I want to use this as an opportunity for education as well, is the insured value. So somebody crashes their car, it's been written off, and they get told, oh no, we're only paying out 100,000, but they're saying, but my car was worth 150,000. Do you get that kind of complaint quite regularly?
Absolutely, yeah. We classify them as quantum complaints. So when there's a claim, it's been accepted by the insurer, then it becomes a debate about the value of my vehicle. Up front, policyholders are asked, what do you want to insure your vehicle for? You can insure for market, retail, and it's really for the insured to decide because it's premium driven as well. Retail being the highest value, you'll pay a higher premium. Market being the lower value, you'll pay a lower premium. So as long as the insurer explains the difference and how that is linked to the premium, then there shouldn't be debates about it. But then it comes to questions like, oh, but you didn't insure your accessories on the vehicle, so now we can't pay for the accessories, or they weren't insured for the correct value. So those types of issues we deal with, yes, on an ongoing basis.
And shortfall insurance, that's the other one. So your car is financed, and what people don't realize, by the way, I must just tell the listeners, is that as you drive the car out the dealer, it devalues significantly, right? So even the retail value of that car has dropped, but you still owe a lot of money on it, and your car's written off, and the amount that the insurer pays out versus what you owe the bank, there's a difference. And unless you've taken a specific insurance for that, you have a shortfall.
Absolutely. And then the shortfall policy is also subject to terms and conditions. The shortfall policy, for example, won't cover the excess that you pay under your main policy. The shortfall policy doesn't cover balloon payments or other types of arrangements. So people go in thinking any shortfall will be covered. But it's not the case. You've got to read the terms and conditions of the shortfall policy because there are also limitations that apply there.
I did not know that it didn't cover balloon payments as well.
No.
Now that is so important. I mean, this is why it's so important to understand your policies. And I do think sometimes it is about the devil's in the detail. And one of the ones where the devil is always in the detail is car warranties. Sure, I have my opinions on car warranties, but is that something that you pick up a big issue with? I know reading your reports that is a bit of a bane of the Ombud's life.
So we saw prevalence in those types of complaints a few years ago. We addressed this with the industry. We addressed it with the FSCA, the regulator, market conduct regulator, and things seem to settle. But we are seeing a rise again in complaints related to mechanical warranty policies. It's always been that they're very technical in nature. So the market to which they are sold, there's not a proper understanding. It's the way the product is sold. Often people are taking out this policy as they're purchasing their second-hand vehicle, which is outside the manufacturer's warranty. They don't get given the proper advice, or they don't go back and read their policy carefully, because there's no obligation on an insurer to go through the entire policy with you. Their only obligation is to advise you of the concise terms and conditions. Anything out of the ordinary, limitations, that's really what they need to tell you up front for you to decide whether to take the product or not. The problem is, of course, that once they get the policy wording, the policyholder, they don't go through the detail. And even if they did, some of the terms are so technical, they're not going to understand how it applies in practice. It's really only when a claim occurs that the reality of how the policy is applied comes to life.
I'm just thinking about a case that I saw that you ruled on. He had taken out one of these, warranties, and his car had overheated. It had blown the gasket, and the damage was 68,000 Rand. But the insurer only paid out 18,000 Rand. You went and looked at the T's and C's, and the T's and C's said, based on the age of your car, there is a limit. We will only pay 18,000. He didn't know about that. And again, that's the sort of thing that I'm not crazy about products that have a lot of limitations. That's all I'm saying. I'm not going to ask you to comment too much on it. But I think people need to be very careful taking out those types of insurances, really.
No, absolutely. And also being careful to just focus on the premium when taking out cover. A low premium usually is an indicator, significantly lower than what, is in the market. Usually an indication that there are more limitations to cover, there are higher excesses. So always be wary that you're not just comparing the premiums, you're actually looking at the terms and conditions. And that's where brokers and financial advisors play a very important role, because they can go out into the market and they can source various quotes and then do a proper comparison.
And, I was interviewing John, who's, of course, the phase Ombud, and how hard they are now coming down on advisors who don't do the kind of work that they should do to inform the customer properly. So, yes, if financial advice done properly can really make a big difference. You can, you'll know what you're paying for, and, you always get what you pay for. Obviously, we focus a little bit on cars because it's such a big item. But what other complaints do you typically get? Like if you had to say this is quite a frequent one, household insurance?
Homeowners, so buildings insurance. What we've seen is since COVID-19, there was a drop in motor vehicles, insurance complaints to our office. I think really because people were in lockdown, there wasn't a lot of driving, there wasn't a lot of car sales, and before COVID-19, we were sitting at around 50% of all the complaints we received were related to motor vehicle insurance. Since then, it has never gotten up to that level. We sit at around 40%. So it talks to still what happened since COVID and how things have really changed in a permanent way in a lot of respects. But the second highest category is buildings, damage to buildings. And that is as a result of all the flooding and the rains that have taken place. All of those acts of nature in insurance terms, acts of nature and damage caused to property as a result of storms and flooding. We've seen an increase in those types of complaints.
And what I'm picking up from my own insurance, this is something I think a lot of people don't realize, is that your insurance policy effectively expires every year. It's renewed every year. And if you go and read, your excess gets increased, so they don't want to put the premium up. So they just increase your excess. Suddenly my excess went from 3,000 to 5,000. If I wasn't reading my documents, I wouldn't have known that. And they can even remove cover. If they feel that your area has now become high risk for flooding, they can remove cover.
Correct.
And that is where and now I imagine a lot of those complaints are coming to you where people didn't understand the impact.
Absolutely. We saw with load shedding, power surge, damage caused by power surge as a result of load shedding, the on and off of the electricity supply, caused damage to a lot of electrical appliances in homes. And what insurers did gradually over the years with the ongoing load shedding was to say, well, it's no longer an unexpected, unforeseen, sudden event. We have schedules that show you when your electricity supply is going to be cut off, when it's coming back on. You need to take the responsibility as the homeowner to ensure that those devices are switched off. And we're actually taking that cover away because the risk just became too high for the industry to be able to continue paying those claims. So what used to be traditionally part of your home contents cover was taken away, and you could purchase power surge cover at an additional premium. So that's an example of exactly what has happened there. But the obligation on an insurer is to tell and specifically draw to the policyholder's attention the fact that the cover has changed and how it has changed. And they don't always do that. And that's where our equity jurisdiction comes in. And we say you didn't inform, not only in terms of equity, but in terms of the policyholder protection rules, and therefore now you can't decline the claim.
You bring me so nicely to a point I wanted to ask, because insurance is so full of T's and C's. I mean, we've just spoken about them with the warranties. How do you as an ombud sit there and say, what is legally binding in terms of the fact that you signed a document versus what is treating customers fairly? How do you fill that, play that role?
So our rules and our terms of reference say that we've got to apply the law, so we can't ever disregard the law. But we can, where appropriate, apply equity, which is the treating customers fairly. And equity for us is, as an example, we look at two aspects. We look at what is the materiality of the breach by the policyholder. Let's say a claim's been rejected because the policyholder's breached the policy terms, did not, for example, install security gates and burglar bars and had a theft. What is the link between the breach by the policyholder to the loss itself? Is it material to the loss? That's the first inquiry, and that's what the insurer has to satisfy as the first round of inquiries. The second is, what prejudice did the insurer suffer? If there's no prejudice as a result of the breach, you can't rely on it to reject the claim. If there is, what is your prejudice? Would you not have insured had you known that there were not going to be security gates and burglar bars? Or would you have insured maybe by increasing the premium? If it's the latter, why don't you charge that increased premium now on the claim? Recover the premium that you would have been entitled to, but still settle the claim. So that's how we, as an example, apply treating customers fairly and our equity jurisdiction.
And again, it's so important, if you did not know, if you get a generic email, I do have to say I got my latest short-term insurance document. It is pages long. I don't have the time to sit there and check and everything, but I do have a broker who then sends me, these are the things you need to know. So I think this is important because it is easy to hide this in generic emails that are just mass sent out. And you're not letting insurers away with that. You're saying that's not okay. You have to, especially when you are removing cover, because people assume because they have a policy, they're covered. But it was covered last year. They don't know that it renews. and the cover can change. And
That's why the changes have to be specifically brought to the policyholder. It's not good enough just to send out a letter to say this is your new policy wording, this is your new policy schedule, go and read it, there are some changes. No, what are those changes? Because you have the right as a policyholder to decide, do I want to continue with this cover or not? Maybe I want to look for alternative cover.
But also, to our listeners, it's also up to us to open those emails, just saying. Not just pushing delete. You had two very interesting cases about what is defined as recklessness. And I must tell you, I didn't really realize that an insurer could decline a claim based on recklessness. I'd never really thought about it. But you had quite an interesting case where a chap, he was driving 100 kilometers an hour through a residential area. It was low light, not great lighting. He hit a pothole, flew along, hit a street light, wiped his car out, damaged his car, and the insurer said that was reckless driving, and you said yes. How do you decide that he was being reckless?
So we rely a lot on the criminal law, because in the civil law, and the contract of insurance is based on it's civil law, it's not criminal law. And we also there's one leading case that has been in existence for many years that guides us on how to determine recklessness. And it's all a question of foreseeability. What would the reasonable person in the insured's position have reasonably done in the circumstances? Would that person have foreseen that had he continued with his or her conduct, there was a risk of a loss taking place and damage occurring or not? So that's to put it very simply. In this particular case, it's at night, there are potholes, which the insured says he saw in the road. He
was near home, so he wasn't aware those potholes existed.
Yes, exactly. Yeah. He, at one stage, also said that he thought he was being followed by a suspicious vehicle. When we called for the evidence, now the insurer bears the onus of proving and discharging the proof that its rejection is correct. So it needs to provide evidence. How did it get to that conclusion? And often there'll be expert reports. So although the insured had said he saw the potholes and tried to swerve around them, and there was this vehicle that was chasing him, a suspicious vehicle, he thought that they were going to hijack him. The reconstruction report and the data that gets downloaded from your vehicle and the tracking report didn't support the insured's version of what he was saying. There was no swerving. There was no attempt at trying to evade this vehicle. There was just consistent high speed. So in other words, the insurer was able to show that this driver had been consistently driving at a very high speed in these circumstances, whereas the insured had nothing to support his submission that, first of all, he had tried to swerve the potholes, try to avoid them, and that there was this vehicle chasing him. So it's all about the evidence and the quality of the evidence and the quality of the experts and their experience, their qualifications, and we weigh up this evidence, and that's why we're able to determine on a balance of probabilities that the insurer's version is more probable than the insured's version.
I think it's a really great case to have discussed, because I think that's important for listeners and for consumers to hear how much detail goes in to adjudicating these cases. Because I think there's a sense of like, yeah, well, you work for the insurers and, you just don't like me and you don't trust me. And, but when you hear that, you actually call on evidence. You look at these cases because, one of the things that also come up often is the drinking and driving. If you are drinking and driving, that's proven. Is your insurance completely is the claim null and void?
Absolutely. So it's not just a question of driving under the influence. It's driving under the influence to the extent that it impaired your driving ability.
Okay.
So insurers have quite a long way to go before they're able to successfully reject those.
So a glass of wine may not count, even though it's above the law?
No, it may not, because they have to show how that alcohol influenced your driving ability. So it's not easy for the insurer to discharge that onus to prove its rejection. And there's a lot of investigation and inquiries that get done. Witnesses, often there are no alcohol blood test results because people are able to leave the scene of the accident without any witnesses. So it's a huge investigation. And then when it comes to our office, we analyze all of that evidence. We don't just take the insurer's word for it. We will interrogate that evidence and see, does it say what the insurer says it says? Because sometimes it doesn't. The insurer is saying to us, but look, clearly he was under the influence and that's why the accident happened. And then we analyze it and we say, that's not what we're seeing here. We don't agree, and then we make our decisions.
Talking on a cell phone, if you're talking on a cell phone and crash, is that reckless?
It depends on the circumstances. It could be just negligence. So the tip between negligence and recklessness is a very fine one, and that's all about the facts of the particular matter. What is the insured saying happened? And again, when you are describing an incident, you always have to be truthful and open and honest, because if you then get caught out, the insurer is going to have the right to reject your claim on a misrepresentation.
That is so important, misrepresentation, because there it's just, that's it. We don't have to pay now because you lied. So a very important point I think we need to add to that is be honest. Have the ombud who will look at the case, but the minute you've lied and falsified information, then the ombud can't do anything for you. I think that's important. I just want to end off with a very interesting another one around recklessness, because this could have gone both ways. So there's a man, he's driving his car, it's a call of nature. He gets out his car, leaves it on the side of the road with the keys in the car, engine still running, quickly goes to take a pee under the tree, and he gets hijacked. But in this particular case, the insurers are saying he was reckless. He left the car running, keys in the car, that is reckless. But you didn't agree because of the way the hijacking took place.
Yes. So had the vehicle been stolen while he went to relieve himself, we may have agreed with the insurer that that was reckless. Leaving your vehicle in the middle of the night, engine running, and you leave your vehicle on the side of the road, especially in South Africa. I think the test of recklessness for South Africans is a little bit different to maybe in other countries where crime is so prevalent. So it wasn't a case of it being stolen. He returned to the vehicle. As he was getting back into his vehicle, he was held at gunpoint, and they tried to force him into the vehicle. He managed to get away, and they drove off with the vehicle. In those circumstances, we did not think that the insurer had proven recklessness. He may have been negligent in that case, and the insurer agreed and then agreed to settle the claim.
Okay, but I mean, it's so interesting, and this is why we need you, right? Because how do you argue those different points? But I mean, anyway, just a really good point. Do not leave your keys in the car with the car running when you go and relieve yourself. I think that's probably just a good one to take away from that. But just to sum up quickly, what advice would you give to the listeners about what they should expect from, how to make sure that they get what they expect from their insurer?
So it's always important to remember that insurance is a contract. So there are going to be terms and conditions. There are going to be rights and obligations. It's not just, I pay my premium and therefore I'm covered no matter what. Insurance is not there to cover you for every single loss. It can't. It would be unaffordable and it would be unsustainable for the industry. So that is why it is so important to go through that policy, because there's no way that an insurer can take you through everything, especially when you've approached an insurer directly through direct marketing and you don't have the broker, an advisor to assist you. Remember that insurance is there to cover you for future, unforeseen, sudden losses. It's not there to cover you for loss or damage that's occurred over time, gradually, through wear and tear or a lack of maintenance. And insurers are able, through the appointment of experts, to determine if the damage has been there long-standing or whether it did actually result from an insured event. And they list those insured events. So they're very specific about what type of events and damage resulting from those events that get covered and what is not covered. And if they're not clear in their policy wording and there's any doubt, again, we say to the insurer, you weren't clear. It was your responsibility to set those out. You haven't. You've created confusion, and therefore the benefit of the doubt must be given to the policyholder.
Well, thank you for that. And I'm going to add in one little tip that I use. I have a broker, which is helpful, but I also get an assessor in every few years. So I have someone who comes into my home and assesses my entire household contents and confirms what cell phones I have, my husband's mountain bikes are all on there, so that when we have a claim, there's no question about what is insured and the value of my content. So I think that is something worth doing. I don't pay anything extra for it, and that would be my piece of advice to give the listeners about making sure they get what they want from their insurance. So thank you very much, Edite, for joining us. And to our listeners, please make sure you catch up with the other discussions with the other ombuds, so that you can also better understand your rights and responsibilities and who to complain to when you're not treated fairly. And remember, the National Financial Ombud is a free service. You do not need to have a lawyer. So please, rather than going and paying for legal fees or going onto social media, get hold of your Ombud. It's a free service.